What's up, everyone? All right, well, here we are. It's a second recap for the day, and I'm going to talk about how it is even possible to lose $1 million in one day. Now, those of you guys who have been following me for a while, you know that on January 1st in 2017, I funded an account with $583.15. And it took me nearly 2.5 full years before I was able to grow that account to $1 million. So to imagine losing 2.5 years of progress in just one day, it's almost unthinkable. And yet, in the market, it happens. So at the beginning of this episode, let me remind you, as always, trading is risky. Easy come, easy go. I always say that. Now, this morning and into the afternoon, we had a stock that rallied up over 250%, a phenomenal move. And yet, I saw a number of traders out there that incurred huge losses, including I saw one trader on Twitter who posted a loss of over $1 million today on this stock right here. How did it happen? By shorting into strength. Shorting a strong stock is one of the biggest mistakes a beginner trader can make. And it's not just beginner traders, intermediate and even experienced traders can make this mistake. And it's not just the mistake of shorting a strong stock, it's the mistake of counter trend trading. And the fact that when you trade against the trend, for instance, when you buy something that's selling off, you have a stock that's crashing, it drops 30%, let's say in 1 minute, and you buy it and you think, well, geez, I'm getting in at a 30% discount over the price it was trading at just 10 minutes ago. So you buy it, it drops another 5%, another 10%. And you think, well, if I add more shares here, I'm getting in at an even better price. Next thing you know, it's down 50%. You add more shares. You're getting in at an even better price yet. Then it's down 60%, 75%. Then it's halted. Then you find out the stock has filed bankruptcy and it's going to get delisted. Next thing you know, it's trading at $6 a share. This thing could have dropped 95% in a single day. In fact, you would have been better off in that instance going short and trading the trend. And when we have a stock like this one today, it's up 50%, 70%, 100%. And so someone shorts it. They think this has no business being up this much. And let's just talk about this stock for a second. It's a 3.6 million share float stock. It's a Singapore company. Now, we know a lot of these foreign companies can see extremely erratic price action. And if we dive into the filings, which we'll do just for a moment, we're going to pull up SOGP, put it in the filings here, and we're going to look at the earnings statement. So when we look at this last earnings statement, one of the challenges with looking at a lot of these foreign companies is that foreign companies currently are not required to have U.S. auditors auditing their financials. So the financials that they supply are audited based on wherever the company is located. And in many instances, the financials may even be presented in a different currency than US dollars, as this is here. So it can be very hard for a retail trader or even an investor to really compare apples to apples with these companies. But nonetheless, we can see that this is not a company that is operating at a profit. It's operating at a loss, a substantial loss, which you could see right here. It's again, without doing the Forex conversion, it's hard to see exactly what it is. But they're certainly operating at a loss right here, net income, net loss right there. And you can look at their balance sheet and you could probably argue this stock has no business being up 100% today. So what was the headline that sent it up? Well, let's see. If you look at midday gainers, so they announced first half of the year revenue, 6 months, was up versus the previous year earlier, up, but by like 25%, 30%, whatever. So it's up a decent amount. That's good, maybe 40%. And the board approved a special cash dividend of half a penny per share. Say it ain't so. Half a penny per share. Well, my goodness, I better load up on this thing. And people did. And boy, it just kept going higher and higher. So you could see why some traders would have fairly logically had a short bias on it. This probably has no business being up 250%. It's probably not going to hold these levels over the course of the next 6 weeks. And yet, can you afford to hold it that long as you go deeper and deeper into the red? And so this is the problem, not just with short selling, but with counter trend trading. Although short selling is popular, and it's, I think, gained popularity because of the fact that if you short a stock that's moving higher and you keep adding, 9 out of 10 times it will have a reversion. It'll reverse back down. It may not come all the way, but it'll come back down. And so this is kind of a similar strategy to a martingale gambling strategy. So if you're playing blackjack, let's just say, you go to a table with the highest limit that you can find. Let's say it's $10,000 limit for the table. And on your first bet, you bet $50 and you lose. So you're down 50. The next bet, you double. So then you gamble 100. You lose. So now you're down 150. The next bet, you gamble 200. You lose on that again. So now you're down 350. The next bet, you gamble 400. You win, you make it back, and you make back all your losses, right? See, this is kind of the way it works. And so you just keep doubling and doubling and doubling and doubling your bet. And that'll work until, so you go from 50 to 100 to 200 to 400 to 800 to 1600 to 3200 to 6400. Table max limit is 10,000. So now you can't go up to 13,000 or 12,800, right? So now there's a flaw in the system. And there's a flaw in the system with doing that with trading as well, because you can't just infinitely add and double and double and double and double your position. You will get to a certain point where you run out of buying power, or there is not enough liquidity in the market to do that. And then you're done. And so the reality, and this is the truth with this type of strategy, and I'm not sure that this is the strategy that was implemented by the person that lost $1 million today, because I don't know them personally, so I'm speaking more generally. But the problem with adding is that it works and works and works until it doesn't. And so I've seen a lot of short sellers that will have phenomenal accuracy. So their accounts look like this. They're growing, they're trading at 90% accuracy, and then it looks like that. And then they start over, and they grow and they grow and they grow, and then they give it all back. And these can be days where you don't just give it all back, your account actually goes like net negative, right? You're actually, if you're trading on leverage, if you're using leverage, and a lot of brokers will restrict the use of leverage shorting, but if you get caught in a stock that halts up and starts skipping higher, next thing you know, your account is in the negative. It's not just at zero, it's in the negative. So this is a similar problem, as I indicated before, with buying something that's really weak. And just, for context, I'm going to pull up a slide deck here that I have on Chinese penny stocks. So if you recall, about a year and a half ago, it's going to be nearly 2 years ago, I was in a period in my trading where I wasn't making a lot of money trading to the long side. And I was feeling kind of beaten down. This is 2023, I was having a pretty bad year. Well, relatively speaking. I mean, I was up like $300,000, but with a goal of $1 million a year, sort of at a minimum, I was feeling, pretty down. And we had kept seeing these Chinese stocks that were popping up, and then basically in one day, they would lose 50% of their value, or even 90% of their value, 100% of their value. It was really like, it was insane to watch these drops take place. And so I came up with sort of the notion that, maybe I should stop fighting the trend and go ahead and, join the dark side and start shorting these things. So I had a stock, one of these Chinese stocks on watch. I'm just pulling up the slides here in my Google slide deck. So I'm just going to move this over here. All right, so let's see. So I'm going to go Chinese. So Chinese company. Yeah, I think this is probably going to be fine. No, actually, I got to go further down. So I came up with the idea that I would, I would join the team of the short sellers, and I would short one of these. And so I had one that I was watching, and as I was watching it, moving, higher and higher, I kind of knew like this liquidation day was coming, just like this. Like I just knew it was only a matter of time and it was going to happen. And we keep seeing, these unbelievable drops where they just go lower and lower and lower. And so it felt like, shorting it was, kind of the right move. I mean, these are just like unbelievable. So what I ended up, doing was I had one that I was kind of honed in on, and I tried to find shares available to borrow. And unfortunately, number one, I couldn't find shares to borrow of it. And number two, when it started dropping, so the day it started dropping, it immediately went on short sale restriction. So you can only short on an uptick. And there was nobody buying, and it kept going lower. So short sale restriction, no availability of shares to borrow, or if you could find it, they were super hard to borrow. They were super expensive. And so I realized, okay, well, maybe so I missed that one completely. So I said, maybe what I should do is I should just start shorting these ones while they're still going up, right? Don't wait for it to start dropping. Wait for it to keep going up. And so there's this one here that, and I'm not kidding, went from about $50 a share to over $2,500 a share. Even a $5,000 share short position would have been a $12.5 million loss. 10,000 shares would have been a $25 million loss. And you guys know, I routinely trade with 40 and 50,000 shares. That could have been, a $100 million loss. And brokers will auto liquidate your account. So I felt like, okay, how do I kind of time these? Now, we had this one stock, ZJYL, and you could see here how on this particular day, it went from 30 down to 22, down to 20, down to 17. And, it just kept dropping. And so, you feel like if you're a short seller, easy money. And then it halted up right down here. It went from 10 to 12, it halted up. And then it resumed and it halted up a second time at like $29 a share. And then it opened at $500. I'm not kidding. It makes zero sense. It felt like, the rug got, it was like, how does this even happen? But if you had 10,000 shares, you would have lost $5 million. Now, in my career trading, more or less, not including the first couple of years, the first few years, but if we look just at my career in the last 10 years, I've made about $20 million just in the last 10 years. So I couldn't even fathom losing $1 million of that in one day, not to mention 2 million, 5 million, 10 million. And yet, when you counter trend trade, that's the risk. And it's because you talk yourself into this being a good, that the further it goes against you, the better it is to buy. So if we go back at some of these, some of these ones that were dropping, on these days where it's dropping, and these aren't, let's see, like this day here, and actually my biggest loss in 2023 was buying a stock like this. I bought it, whatever it was like, down here, and I was like, oh, it's going to bounce. The next thing you know, it's going lower and lower and lower and lower. These are stocks that can be just so the problem is, this is very common with these foreign listed companies, that insiders own it at pennies pennies a share. They own it basically for free. So they can still sell it at $1 a share, and they're cashing in a lot of money when they own millions of shares. So these don't bounce. They just keep going. They go lower and lower and lower and lower. And so if you get yourself into that mindset of, I'm going to buy the dip, I'm going to buy this for a reversal, right? The lower it goes, the better the deal is. But for a lot of these, there's no bottom. And so inversely, you're shorting something that's strong. So the higher it goes, the more shares you add, the better and bigger the reversal. So this is what's incredibly difficult about counter trend trading. Your mind plays tricks on you. It convinces you to keep holding your position and to keep adding back, in spite of the fact that if you had actually just joined the trend from the beginning, you would have made a heck of a lot of money. You were counter trend trading. You were trading against the trend. You're trading against the tide, right? And So I'm up here in Canada right now, and I'm actually overlooking the Bay of Fundy, and the area where I am has the largest tides in the world. They go out almost a mile and then come back in, and the tides are so strong. And if you try to swim against this tide, it's not going to happen. People don't really swim in this area because the tides are too strong. The tide's going out, and you're trying to swim back in, and you're going out with it. The tide's coming in, and you're trying to swim out, and it's not going to happen. And with these types of stocks, you're shorting something that's really strong. Like I said, it's like it feels like it works and it works and it works. But that black swan event, it only needs to happen once and you're done. And it's not just the black swan event of a stock that goes higher. Look, stocks go higher, you cut your loss and you get out. It's the combination of the stock going higher, in the case of short selling, and for whatever reason, you being emotionally compromised on that particular day and not being able to cut your loss. And I've had days like that myself. Look, I'm not going to say I've never had a big red day. I've had some really big red days. I've had 6-figure red days. I'm fortunate that I haven't had 7-figure red days. I might at some point in the future. And the scenario, there's some scenarios where that could happen for me. I hope that it does not. It could, but right now, I don't even have that much money in my account. So as my account grows, I take the money out. So $20 million of trading profit, that money doesn't sit in my account. I take it out, I reinvest it in other things. I reinvest it in real estate, I reinvest it long-term in the market. I don't keep it in my day trading account. So right now, even if I lost my entire account right now, it would be less than 5% of my total career profit. I could recover from that. But the problem, like I'm saying, with shorting is that you could lose an infinite amount of money if you took a position and God forbid you were short and you had one of these crazy, foreign listed companies that resumes at $500 a share, right? And just, completely obliterates you like it did on ZJYL. And look at, even just to keep things in perspective, GME, the GameStop short squeeze resulted in Melvin Capital losing $6.8 billion. Now, for what it's worth, they lost that money like right here at the top. Were they right eventually? To be honest, even within 2 weeks, the stock had come almost all the way back down. But could they afford to keep holding? And if you get a margin call and no one's willing to give you the money to meet that call, you're going to get liquidated and you're out of that trade and your account is gone. And, that's a real sad way to end your career. It's a devastating way to end a career. It's not something I would wish on anyone. So look, obviously I have a bias when it comes to trading. I have a strategy that I feel good about. It doesn't mean it's the right strategy for everyone. So I'm not this isn't about me trying to be super promotional. Like, you should learn my strategy. That's the only way to make money. There's a lot of strategies out there and a lot of them will work for people. And even my strategy, which works really well for me, isn't going to work for everyone. So you do have to find your niche in the market, but it's kind of all about your downside risk and your upside potential. And I feel like my strategy has fairly contained and limited downside risk that I'm comfortable with. While I can take losses, I'm not shorting stocks, and I'm certainly not shorting these Chinese, Singapore foreign list companies, Hong Kong stocks that have the potential to go up 10,000% in a matter of weeks. You short one of those and it makes no sense. Does the stock deserve to be up this much? No, it doesn't. But shorts got trapped. And they've been in a market where they've been getting rewarded, right? A lot of these haven't been holding up, but this one just kept pushing higher and pushing higher. And it did it, let's just say, set the record straight. It did it on over 120 million shares of volume, which represented over $1 billion traded. $1 billion US trading hands today on this stock. And the float's 3.6 million shares. So when you've got that really rapid rate of change, 3,117 times relative volume, this is a stock that is obviously impressive. And you know what? I didn't even trade it. I didn't trade it because for me, the window to focus on trading it was pre-market. Well, the window that I was focusing on trading today, period, was pre-market. I'm up in Canada. I'm in the back of my Sprinter van, so I'm traveling and, camping out and stuff like that. So I said, I'm going to trade every day while I'm traveling on this trip, but I'm only going to do at most 3 hours a day. So from 7 a.m. to 10 a.m. And I did my full 3 hours today, and then that was it. So I did see at the end of that window at 10 that SOGP was pushing higher. But to me, it appeared to be pretty thickly traded. I noticed it was a Singapore company, and I just thought, I don't want to mess with it. Anyways, it went higher, and I think that shows some good, that's a good sign for momentum traders in general. But I just wanted to put the word out, in terms of, just to spread awareness about the risks of counter trend trading. It's more popular for people to short these stocks because there's more stocks that go up 100% and pull back than there are stocks that drop, 50% and bounce. So in this bull market, there's a lot more opportunities to short things that are strong. And, a lot of them, will revert back to a certain extent. So if you keep adding and adding, you get your cost basis high enough, you can come back down to profit. But then you can get something like this where all of a sudden, you're talking about some really, really big losses. So, hey, it is your call. Trade how you want. If you like shorting and you can manage your risk, then, good for you. Good for you to being able to keep it kind of in check. And hopefully you've got risk parameters on your account that help, prevent you from having one of these kind of days. But to me, it feels like, in my career, just over the past 10 years, it's like 2,500 trading days. And when you're shorting every single day, these types of stocks, you really only need one mistake like that to potentially wipe out your entire account. And that's really scary. That to me, it's scary enough being a trader because, you only eat what you catch. You've got to show up every day. You don't always make money. Some years are better than others. Some years are, a grind. So there's already that insecurity about sort of not having consistent income. But, to add on top of that, the fear of potentially being forced into retirement because, you had 2 or 3 days in a row where you just went full tilt. That's scary. So look, keep your risk in check, whatever strategy you're trading. If you like the way I trade, you want to learn from me, by all means, keep watching these episodes right here on YouTube. But if you want to share this episode with some friends who are currently shorting and you're thinking, they're playing with fire and it's only a matter of time, I hope it helps them. I just don't want to see people lose their accounts and go into the negative. And that's what can happen when you are shorting stocks that are really strong like this. And it's what can happen when you trade on leverage. So be responsible when it comes to shorting, be responsible when it comes to leverage. And I'll see you guys back at it. I'll be streaming tomorrow morning, 7 a.m. to 10 a.m. Eastern Standard Time. So obviously, those of you guys who are members, I'll see you first thing tomorrow morning. Okay, see you guys then.